Go.
Okay guys, now for the deeper look into what we already spoke about. Once again, this is September 3rd, Wednesday, on an NFP week. So this is the beginning of September. Very importantly, theoretically speaking, August, which just ended, is a lower probability month because it's the summer season. Most of the fund managers, all the big players, the smart informed money, which can be found on the market, are usually taking their holidays in August. Therefore, there's not as much volume, not as many lots or contracts are being traded on the open market, and therefore the market is lower probability. Most of you are already aware that there's an algorithm behind price which is designed to allow smart money to earn money and for uninformed investors, retail players to lose their money. So one of the algorithmic functions is August being low probability. The same goes for January. The same goes around Christmas and December. Basically, whenever there's major holidays, the market tends to hide its hand, so to speak, give us lower probability price action because that's not when the important players are in the market and they're not making money. So in this case, it's already Wednesday, September 3rd. At 10 a.m. we're having Jolt's job openings. Per the teachings of ICT, the inner circle trader, we are deeply aware that very often there's a large expansive move at the beginning of the week, the lesson being the following. It could be on Monday. If it does not appear on Monday, it could be on Tuesday. If it does not appear on Tuesday, it could be on Wednesday. And if it does not appear by Wednesday, do not trade on Thursday. So generally speaking, this doesn't give us much information, but we're looking at the following. Right here, for example, we know that there will be no expansion move on Monday because there's a bank holiday. Therefore, part of the price action is missing. And even if we open up the daily time frame, we can see that the current active candle is Wednesday. Then we have Tuesday. And when we move back further, one more candle, we are on Friday. AKA, the Monday candle is not even appearing on the charts. And if we look on the 4-hour, this is what would be the Monday candle. So by default, just by knowing that there's a bank holiday, we can already tell that the expansion will not be coming on Monday. Therefore, we are waiting for it on Tuesday. Now, in this case, we had a red folder news event on both days. This one will be coming in around 40 minutes. But the next thing we can look into is the orange folder. And we had two orange folders yesterday, one of it accompanying the 10 a.m. window, news release window. And therefore, it's higher probability that the expansion will be coming on Tuesday. And on top of that, since we have been trading for a long time, we have the statistic. We've both back tested and forward tested all of that stuff. And we know that Tuesday is much more likely to have an expansion in a situation when there is no expansion on Monday compared to Wednesday. Therefore, we predicted a possible expansion on Tuesday. It already occurred in price, meaning we are not expecting it to happen today on Wednesday. There's no 100% guarantees in trading. The structure in itself is a market maker sell model on the higher time frames, something I will be teaching in the future. And so there is a small possibility that Wednesday today expands again to the downside. But statistically speaking, this is less likely. So what would that translate to on the open chart? Right now, we're having let me remove my drawings. The Asian session and London session already gave us a accumulation and possible manipulation to the downside. Now the one thing we're interested in is to see if this is the true manipulation for the day, then we distribute short, or if we're going to have a fractally smaller cycle, which will give us a new accumulation, possibly a new manipulation, and a distribution starting then. If that is the case, then both manipulations in essence would be respected because we manipulated up, we just manipulated a little bit more, and then the correct distribution move is short. But if we have the opposite scenario occur, we're going to see the following thing: an expansion to the downside, perhaps a sequential S&T on the bottom, which would create a cracking correlation, and then we're going to move up. So in essence, we are looking to receive a little bit more information during the opening minutes, the opening 30 minutes of post-market open, including, but not guaranteed, the news release in itself. So around the news release, which is in 10 a.m., we are expecting either a setup to form before it, or a setup to form because of it, meaning after it. For me personally, the preferred scenario is when the market creates a setup before the news release, we start distributing slowly, and then the news release acts as an excuse, distributing price harder and faster in our favor. We will see which one of these scenarios will occur, which one will happen. But in general, as we said in the shorter version of the video, we are expecting a smaller overall daily candle, meaning what happened yesterday. This is yesterday London and then New York AM. We're expecting to stay smaller than that, perhaps in the range. Therefore, for me, the most likely scenario is either a further manipulation to the upside before we go short. The second most likely scenario for me is a manipulation down before we continue long, but in general, we should not be moving too much out of this price range. One of the things we'll go deeper as our mentorship progresses is standard deviations based on specific ranges, but that's a topic for another day. Does anyone have any questions?
No, bro.
Everything
Very clear,
clear,
so
bro.
Okay, beautiful. Thank you for your attention. And we are approaching market open in 3 minutes. Thank you.